Hey guys, Boris BK Forex. Welcome to our crosses section for October 15th to October 19th, 2018. And I got to tell you that the crosses this week actually have been very challenging to find intelligent trades simply because not every cross, but every FX pair has a positive and negative story really built in. I don't mean just the usual normal positive negative story, but just this possibility for massive volatility one way or the other way, which makes the crosses very difficult to pick because there is no relative strength and there is no relative weakness. Everybody can be relative bid and everybody can be relative weakness depending on how the headline news goes, which makes, I think, the euro crosses in many ways a huge challenge. Certainly makes all the pound crosses a complete crapshoot. It's basically whatever comes out on Brexit that's going to determine whether the pound cross works or pound cross doesn't work. So I've actually stayed away from all the pound crosses, particularly for that reason, since it's just literally a guesswork at this point to try to find a relative bid, relative weakness trade. And I've started, I think, found more quieter, less obvious trades. Let me show you what I have in mind, and we can take a look at the charts in just a minute. So Aussie CAD has corrected a lot of that downtrend, but in my opinion, the downtrend, the relative downtrend between Aussie CAD very much remains in place. Canada is the interest rate bid story, meaning the Bank of Canada is going to increase interest rates. Australia RBA is going to stay stationary forever. There is, I think, imminent possibility on a long-term basis that we see 90 eventually on that trade. Having said this, though, because of the larger volatility and larger moves, if you want to participate here, you have to give yourself much larger targets, larger stops in order to remain consistent within trend. I'll show you on the charts what I have in mind. Conversely, if you want to trade the turn, what looks kind of interesting, and I would actually, here's the thing, I would get a lot more bullish this particular trade if I had fundamentally positive U.S. news on Monday. So if I get retail sales that are blowout numbers, either match or beat numbers, really look good, and turns the sentiment of U.S. investors much more positive. The idea is that the U.S. economy is doing great. Stocks really don't need to go down. The consumer, it seems to be better than ever, and spend is going to happen. Profits are going to be good, so they start rebidding the stocks. All of that drives yen flows really well, and I think Aussie actually does not suffer concomitant decline. So Aussie yen, which looks very clean here as far as picking up near the bottoms, looks like an interesting turn trade to the upside. But I'd really love to have that funded kicker on Monday before I could commit to this trade wholeheartedly. And then Euro Kiwi, I continue to believe that Euro weakness is a very real possibility. So an interesting way, high volatility way, but an interesting way, of course, to bet that is the Euro Kiwi to the downside because we haven't cleared the 80, and it looks like now 175 is much more in view. Let's take a look at the charts here and just see what I mean. So here's, oops, wrong one, sorry. Here's Aussie CAD. So you can see this is a daily, it's just right now is the classic downtrend, right? We're touching the 20, touching the 20, touching the 20, touch the 20 right here. Now, is this a sort of a last touch, the final sell, and then you're going to sell the bottom at this point? Could be. But I think the clean clear, this is what I mean about the idea that you have to give yourself wide parameters to truly trade this. To be truly wrong this trade, it's got to be around 95. It's got to clear 95 for you to say, yeah, you know, Aussie completely bottomed against Loonie, and it looks like it's actually now bottoming out process, not a further move to the downside process. So because it's such a wide stop, you gotta give yourself a very decent target. That's why it has to be targeted around 90. So it's a very wide trade. Another possible way of trading this is to sort of say, okay, I'm going to short it here, scale up, small scales all the way up to like 94.50 if it goes up against me, on the assumption that longer term trends still favor the Canadian dollar and this downtrend is not over. I mean, to be wrong this trade would essentially imply this downtrend is over. I don't think it's over. That's the trade as it stands. Not a low risk trade, but I still think a relatively decent trade, both from a fundamental and technical point of view. Now, conversely, if you want to trade Aussie to the long side, if you look at Aussie yen, this is pretty much the bottom, right? We bought 79, double bottom, nice clean, much tighter, much cleaner risk here. You only got about 100 points worth of risk if you want to risk this trade. As I said, I really would love to have this trade with yen support, because this is as much a yen trade as it is an Aussie trade. The Aussie component of this particular pair is just to stay still, right? It's really a bet on the idea that yen starts to rise, Aussie stays still, and you have a chance maybe to make it back up towards the 81, which is a 20-period SMA. So I like the risk-reward ratio here, but you'd love to have that fund kicker behind you on Monday to truly feel committed that this is gonna work, that we've really found the bottom on this particular trade. And then last but not least, much larger volatility trade. But look at this failure. I just love these failures. Whenever I have 5 or 6 candles that don't penetrate a price to the upside, or 5 or 6 candles in a row that don't penetrate a price to the downside, I'm always interested, because that's always a good mark that things could go the other way. Now, yes, we could have, this is just consolidation that breaks out. You could always be faked out. We could have peace and love break out in Rome and Brussels, but my bet is we don't. And that creates a really interesting possibility to the downside. Now, certainly the risk here is much larger, but these are Kiwi pips, so there's not the larger pips. So we're at around 77. You got to risk up to 180. So you got to risk about a couple hundred points, 77.50, 250 points, to truly give this trade breathing space. But on the other hand, it has a reasonable chance to maybe crumble all the way down to 175. High vol, but also high potential trade, and clearly a big stall here that's showing that euro just doesn't have the oomph anymore to kind of make it. That is the crosses for this week. I wish you guys the best of luck, the best trading. Boris, over and out.